Yeah, so thanks everyone for tuning in. We appreciate it. I know it's like short notice, less than 24 hours, but we really wanted to do this. My name is Noah. I'm part of the Spikeet team. We wanted to hold this webinar for like quite a while to show some of our users and people who've never heard about us how to better utilize the platform and what you can basically do with what we offer. So just a quick overview for guys who've never heard about us. What we do is we basically built a platform to help you pull financial data, historical data in a quick and easy way. We made it very easy so you don't have to know how to code. And it just can give you a few examples. For example, if you want to pull, say, the past 10 years, all 20% gappers, or all stocks that had earnings on the day, you want to pull that. Or say you trade a specific stock like Tesla. Whatever your criteria is, we give you the ability to filter the entire market, extract data to a spreadsheet, and then do the analyzing of that data. And we have here Karan with us. I'm pronouncing it right?
Karan, yeah.
Karan. He's been a user of our platform for some time. So, welcome. And he will demonstrate to us his thought process today, how he uses the platform and what he does after. So welcome, man. If you can introduce yourself a bit, tell us about yourself, how long have you been trading, and where you're based and all that good stuff.
Sure. Hey guys, my name is Karan, and I'm basically from Ottawa, Canada. I recently moved to New York City in the year 2019, just before the pandemic started, 6 months before. And I basically have been into trading or studying trading starting 2018. Or end of mid 2018. But when I got into trading, I knew that like it was tough. So the first thing I was doing was mostly tracking data, because like I had no idea what I need to do. And at that point, I didn't know anything about Spikeet. So I was just manually doing it, trying to figure out what my personality is and how I want to trade the stocks and things like that. So mostly I was really gravitated towards small cap, mostly because I came from the Tim Challenge, and like I was watching Tim Gratani there, and like he was really adopted my strategy from what he was talking and stuff like that. So fast forward into 2020, I decided to open a small account, started trading with 2,500. I had some early success with it. I was able to grow that 2,500 into about $5,000 by March. But then came the market slowed down for a couple of months, and not having enough experience, I actually slowly dwelled that account down to $800 by May. Mostly Allocate fees, commissions, and stuff like that, taking the paper cuts. And then I had to double down on my data, because obviously the volume that I was tracking and everything had changed coming to 2020. And that's where like my issues started coming up. So again, double down on my data, started seeing what the new volume criteria are. And by God's grace, starting that 800 in May, I've now taken that account to nearly $250,000. So again, I do not have PDT. So because I'm Canadian, I was able to open an international account, if anyone's wondering. So I could avoid the PDT rule. So I came across Spikeet, watching Tim Gratani's trading tickers too, and that really something that like I was like, okay, I need to do something that makes my process easier. And I started using Spikeet, I think, when they were in beta phase. Or I think I'm not really sure, maybe they were or not, but I've been like a user for them for a year or a little bit more than a year now. And I have been using it very actively, and I run a lot of queries. At this stage, my more of my thing is like, I need more conviction to take on bigger size, to take on bigger gains and grow my account much faster. So Spikeet is what I really use to really get some conviction behind my thesis and take on that, big position where I'm taking on, half of my account size sometimes, or sometimes full account size, to really get big gains. So anyways, let's start with,
so maybe, show us a little bit like, what do you do when you have an idea you want to implement, and how do you approach this, our software? Like, what's on your mind, and then we can take it from there.
All right, so I'm going to share my screen here.
And by the way, questions we'll leave for the end if you guys have any.
Can everyone see my screen?
Yeah.
Awesome. Okay, so I'm gonna run a sample data set. I've already pulled the data for one of the strategies, which I want to go over with you guys. And I'll really show you guys how I basically create a more high conviction, high odds criteria, where like I know that, okay, 9 out of 10 times or 8 out of 10 times, I am going to be on the right side of the trade. And what are the perfect criteria where I can really take on massive size, and stuff like that. So let's just actually walk through how would I pull the data. I'm pretty sure some of the users might already know how they do it, but for someone who is new to Spikeet, I'll go do that. So I'm gonna so first thing we go to get data. I'll just name it gap downs. All right. And I'm really gonna start looking starting 2020, because the liquidity has changed a lot starting 2020. And that's where like I follow volume. Everything I do is based on volume. I do not use any indicators. My chart is just purely volume and VWAP. Those are the only two things that I really use as indicators. So now I'm going to go until November. So November of 2021. I'll just pick a date, 14th, let's say. And then here, this is your filters page. Okay, so here you want to know like what is the criteria that you're really looking for to get those particular list of stocks. So obviously, if you want to trade anything that is a equity, so we're just going to do stocks. The next thing is, what is the daily? So my personal preference is basically looking at stocks that are over $2, just because if I want to locate shares, and if I'm trading under $1 and I'm trying to take a 30, 40, $50,000 position size, I'm really locating 30, 40, 50,000 shares. And really, I don't want to locate that many shares. And my risk goes up every cent move. My P&L is moving very violently. So I really, ideally to over $2, so best case scenario over $3 is where I really hone my niche. So I'm just going to say that, the previous day close, the close is over $2. Okay, so greater than equal to $2. So that's there. And then the next thing, we're going to look at volume. Okay, so the volume is something that, again, I need, even when I'm trading a gap down play. The whole concept with gap down plays for me is that the buyers from previous day are stuck. And if I'm attacking, I'm leveraging those buyers who are stuck and shorting into those buyers into some kind of pop, assuming that those buyers are now going to sell because they are down on their position from the day before, or they were up on their position and now the stock gap down, and now those buyers are underwater. So for me, enough liquidity needs to be tracked. So the minimum criteria that I look for volume is 20 million. Higher the better. So I'm just going to put it.
And let me jump in here. Do you care about adjusted data or not? How would you approach that?
No, I really don't care about that. No, I just look at the volume.
You want the actual prices and volume that occurred in that day.
Yeah. Because I don't care about splits at that point, because then the split changes the data. So I'm using that actual volume on that day.
Okay.
So then the next thing, it's basically very simple. So the next thing I want to know that the stock has made some kind of run. It's not closing at 20% on the day, so that the range doesn't die down for me. So the minimum percent that I need when the stock is closing is 50%. Now, obviously, this is just a low end of the number. I will be using a much higher, criteria, but this is just for my getting to see if there's an edge when the stock closes just at 50% or a little bit higher. Now, the next thing we have here, they have a manual formula sheet. So this is where you can code your own ideas or own strategies or own filters in there, the filters that Spikeet does not provide. So the first thing we have is, so what I want to know is that the next day on day 2, the stock actually closed less, open below day 1. So if you look at the daily data point, so they have this. All right. So if I take this.
And guys, again, I'm jumping in here. When you guys normally approach custom formulas, we advise first define your rules in words. And then once you have it in words written down somewhere and clear, you can start translating it via the documentation that we have. So just that's a quick tip. First, start with the words. Like, for example, gap down less than 20%, open price on the current day less than the previous close or something like that. And then you can start translating.
All right. So here, there are 2 things that I want to know. All right. So they actually describe you what the data points are. So if you look into it, you'll be able to see what the data points are and you can read up through it. I won't walk you guys through that. So you guys can read it on your own. But basically, this is what I want to know. So on day 0's close. All right. Close. And then I'm just using the adjusted is greater than day 1 open So what I'm saying is the next day stocks open was yes. So the previous day close was greater than the next day open. So that means the stock technically gap down in my books, right? So I'm just gonna put that tag as gap down. Now this defines my filter. Very simple filter. I don't want to create too many race conditions because those conditions I will go into my Excel sheet and I will create those there because I want to get all the data set that I can get to really start digging down into the data and start creating my own criteria from there because I don't want to filter out any stock. I want to have all the data that I can get and then use the Excel sheet to start really nailing down my criteria. So now this is the columns page, which is basically all the data that you're going to see in the Excel sheet that you pull. So in here, you can just add your symbol. Then here we have the date. So I want to know what date it happened. So if I want to go refer to the chart, I can go look at it. Then we have open, close, high, low, and then volume. Right? Every time I'm caring about the volume. The next thing I want to know is what is the next day open, next day close, next day volume. So now again, Spikeet has here. So what is current day? Previous day is -1. So next day will be 1. So I'm gonna say open on day 1. So that's next day open. And then I'm going to do close on day 1, which is next day close. And then high on day 1, which is next day high. And then low, next day low on day 1, and then volume. Then volume on day 1, and that's next day volume for me. That's what will show on the Excel sheet, the header. Now, that's basically what I'm interested in. Now, okay, again, to anyone that's been trading for a little bit of time, you also know that time of the day really plays a key role as well. So you can take those numbers, but if you also add to time of the day, really you get more understanding on like when should you be able to cover or when should you be able to take on profits or like at what time the high gets set. So the next thing I'm going to also look at is time. So they have some advanced formulas here where you can really define the criteria in more advanced way. So here you can say, I want to know the time between 9:30 a.m. to 4 p.m. So again, I don't take too many trades pre-market. Pre-market, I'm just watching the action. I'm creating a trade plan. So I don't really look at pre-market data apart from pre-market highs. But really because if I'm taking on size, I don't want to be squeezed in pre-market volatility when suddenly I've been burned far too many times where like stock is gapping down and I've taken a short position pre-market, and then suddenly volume comes out of nowhere and suddenly I'm down in my position, and then I had to fight my way back to basically ending up green on the trade. So I took out pre-market trading altogether from my books, just because like if I want to take on size, I really can't throw in size pre-market, and I would rather wait for the real volume to come in for me to start taking on a trade. At least for gap downs. For gap ups, it can be different. If the stock is 2,000% extended, I'm really feeling aggressive, and I'm really thinking that the trend is going to be down that day. I could take a pre-market position, but really depends if there's a consolidation level above or not. So now,
just a quick fix here. If you want to get data by 4 p.m., you should put 3:59. This is something we'll fix maybe in the future, but you want to put the beginning of the minute of the last minute. So it will be 3:59 exactly.
Okay, so that's next day one. And then here, what I want to say is high is highest. That means what was the highest point of at what time did the stock make its high? So here, I'm just going to say next day, high of daytime. And then the next thing also, I want to know when is the low getting set, if there is any odds in terms of low getting set. So again, 9:30, starting 3:59. And then when low is at its lowest. So in name, I'm just going to say next day low of daytime. So here I have so next day low of daytime. All right.
And you want to put day one exactly. Yeah. So that will give you the high.
You can go confirm what this is right here. So those columns are fine. Now, the next thing I'm really interested in is something that I really, for gap downs, I do care about market cap. Ideally, I don't trade market cap over $100 million unless like stock is like AMC or something like that. That's like up 2,000% and then it's gapping down. But really, what are the outstanding shares count? What is the market cap? I know Spikeet sometimes does not have some of this data. So I'm mostly using this data for gap up plays, where like I'm trying to trade gap and crap. I really throw in a lot more emphasis into outstanding shares and market cap there. For gap downs, not as much, because if the stock is running about over 50, 70, 80% a day prior, ideally only small caps mostly do that kind of range. So really I'm looking at, I'm adding this data, but you'll see in the data sheet how I use it. And then in here, the other two things that we want to look at, the last thing we want to look at is what's the percentage change close. So here I want to know how much was the stock up. Now you can go review it and you can say if you want to enable daily updates, and then you can get the data. Now, this request will take time. I've already gotten a request and I've downloaded it, and I like to work off a cloud. So I keep all my data on a cloud. In case I'm traveling and I don't have my laptop, I can still go and start looking at the data. So this is the same exact sheet that we have, and the data is pulled for the exact same criteria. And what I'm going to do is I'm going to now show you guys how you can really use this data to create a criteria that's like a higher winning percentage. So first thing I really want to know is the odds on my side. How many times, if I take this trade 9 out of 10 times, am I winning? And the bigger the winning ratio, and if you're good at reading price action, you can really put the odds on your side. So first thing you want to do, and you just want to add a count, because this will just help you create a winning. Basically, you want to see how many trades happen, and then out of that, how many trades work in your favor. So here we know that 488 records were there. Now, next thing, how many stocks closed red on next day, right? So next day, closed red. Basically, the red does not, this red, or actually, let me clear this a bit better. So next day, closed less than previous day close. So basically what I'm saying here is that on the next day, did the stock actually close, if it gapped down, did it manage to close gap down as well? So the next thing again is if next day close is less than previous day's run close, then say it's 1, I'll say it's 0. Now, again, this thing, you can just run it down all the way in Excel and autofill it. So shift and enter. So now,
can you just explain what this is again for people who may not follow the last column?
Just let me freeze 2 columns so we can see the first 2 columns at all times. Now, what this means is, let's take an example, right? So if a stock CTIB is closing at $4, okay, and then the next day it's opening at $3. What I really want to know is, did the next day the stock, did it close at 450 or did it close at 250? You know, did it, or maybe did it close at 350, right? So did it manage to stay gap down the whole day, and it actually ended up closing red on the day? So it did not squeeze green, trap shorts, and then went and made another huge run. So that's the first thing I really want to know. And so now if we just do that, out of 488 right here, we can see that 405 records actually ended up closing red. So that's about 70+% winning ratio. But then that's not enough for me, because what if I took a short at open and then the stock spiked and then it never went below my entry? And that really, it's not something I would want to be in a situation like that, because more often than not, I could also lose money, right? So even though I'm risking off the previous day close. So then the next thing I want to see is like how many stocks close below open. So next day close is less than next day open. So that means if the stock opened at $4, did it close under 4 or did it close above 4? So now if I can do that. So if next day open is greater than next day close, then give me 1, else give me 0. Now, so here we know that 405 records did not squeeze green. That means it's about higher than 70% win ratio. But then here's the thing, kicker, right? If you see right away, so that means that only 316 out of 488 records closed below their open. Now, that's a significant drop in the win percentage, because if I just take my phone and I do 316 divided by 488, that's a 64% win ratio. And I don't like to trade stocks that give me 60 or 70% win, because I don't have conviction in them. So I would rather trade less, take on bigger size, versus come into the market every day and throw my money, well, at least when I'm taking on size. So this is really for taking on size on a play. So right away, I know that like most of the stocks, at least 40% of the stocks in this data set actually ended up closing the next day above their open price. So that doesn't put the odd in my favor. So now what else can I do to make to increase my odds? So let's say, let's think about how would the buyers get trapped, right? What is required for a buyers to be trapped? The stock really needs to close, needs to run. Maybe it's squeezing short sellers all day yesterday. And then what happens is it closes strong on the day and it creates a huge body, because that's really how buyers, if I'm buying the stock into close, that is what I would technically look for, a strong close on good volume, and short sellers were trapped the previous day. And that is like a stock, DWAC was a good example where the stock closed right near its highs and then started squeezing, right? So most of the stocks that are squeezing near the highs are closing near the highs are potentially good long candidates into close, or ideally that's what I really look for my swing long plays. So then I can say, what is the body of my previous day? So I can say previous day body. What was the percentage of the body on the day before? So I can say round. So now we want to say previous day close minus previous day open. Now this is me taking into consideration that the stock actually closed green on the above its open price. So if it's closing below, then we'll get a negative value. So previous day close divided by previous day open. Minus previous day open divided by previous day open times 100, and then I'll just round it up to 2. So now we are getting a previous day body. So maybe the answer lies in previous day body for me to actually have a winning trade. So maybe I'll start adding some filters. So I'm gonna add a filter and just see whether this helps me out. So insert, data, create filter. And now let's say I say that the previous day body is basically greater than 20%. That means the stock, I don't care about how much the stock spiked, but the difference from open to close is about 20%. That's the minimum range I'm going for to see if there is anything that increases my winning average year. All right. So here, let's check now. So my count is 283. The next thing I want to know is, this is the main data I want to pay attention to, because I know that most stocks didn't squeeze green, but at the same time, they did not close below their open. So out of 283, I get 203 records that basically fit the criteria. So 203 divided by 283. So that increased our win ratio from 64 to 71%. So that's telling me there's something in this data set that I can optimize to really increase my win ratio. So maybe I'll increase it to 50%. Does that give me that perfect criteria that I'm really looking for? So that's 100. Obviously, your plays are going to go down, right? But at the same time, I'm not trying to trade every day and getting chopped up by the market and really, take money on paper cuts and lose size, because that's more detrimental to my psychology and to my account. And I would rather trade less and make on bigger gains. And the other times I'm trading on small size, testing on strategies and things like that. But really my big gains when I'm taking on massive convictions. So now 117 records, now 160. So again, the win percentage really did not change that much. So maybe I want to go to 100%. So now here is, so basically the stock closed really strong previous day. It made a massive run, closed strong. I don't know how much did it close near the highs, but I know that the stock closed strong and buyers might be interested. So now if I look into it, 43 records, and then 52. So here, our win percentage, this is a golden criteria, because if you're good at reading the tape and you know that the stock actually closed pretty strong previous day, and it really had a good run, and the next day it's gapping down, we know that the stock actually is something that like you can take on size, because you are only, if it shows up 52 times in the last 2 years, that means 26 times each year, and you are taking on a 43 out of 52 times, you're going to win. And the other times, if you're good at cutting losses quickly, you can get out. Now but that's not enough for me to understand when should I be taking my profits. So I want to know what is the, so let's just clear filters again here. And the next thing I want to know is, what is the range that I need to look for, right? So from open to close to the end of the day close, what is my range, right? So open next day next day open to next day close range. Okay, so all I'm doing is I'll just add the full range here. So now I want to see what is the percentage gain that I'm really looking for, right? So if I do next day open, so now here I'm assuming that the stock is gonna close red. Now negative values means it actually closed close green. Okay, so next day open minus next day close divided by next day open times 100. So here I basically get this numbers. Now let's put that condition back in, right? Greater than or equal to 100. Now here, this is a good range, right? So this is us assuming we did not even get a morning spike, right? But now we'll see what is the percentage of morning spike that we could potentially get to really maximize our profits. But if you see, if you're good at cutting losses and you cut it at 3 to 5% loss and you take on a good risk level, but then when you're winning, you're making on good days 24%, 24%, 42% in some instances if you wait until close, 26, 36%, 39%. So that really 42%. So if I have a 25, 30,000, on the bare minimum, $30,000 position size, and I'm shorting, I'm bound to get out for a 40% gain. Let's say I even cover half and I write the other half because I like to lock in profits. So just because if I'm winning on a trade, I want to take on some profits. And then if the trade goes against me, I can still get out for a profit. I'm still on the other half. I'm almost capturing 40%, 30%, 30%. So I know that okay, those are good numbers for me to really capitalize on. Now, what happens if the stock ends up spiking? Is there a better entry, right? So we'll go from the high to close, right? Because obviously a lot of stocks give you a morning spike, and I like to short into spikes. It makes it easier to take on size rather than just shorting into a dump. So next day open to next day high. So now if I do the same thing here, and if I take next day open, so next day high minus next day open divided by next day open times 100. Oh, wait, sorry. I want to actually know what is, so first we'll look at open to high spike, and then, sorry, we'll just do it again. So we'll look at open to high spike, and then we'll do it, and then we'll see high to close drop. So round. Next day, I'll do the same thing again. Next day high minus next day open divided by next day open times 100, comma 2. Now, the next thing I also, while we are here, I want to do is next day high to next day close range. So here, this basically tells me if I short into a spike, can I maximize my profits here, right? So here I'll do round. Next day high. Next day high minus next day close divided by next day high times 100. So here I'm again assuming that the stock is closing below the open, and it's actually closing red, or at least closing below the highs, right? So this will still give us most every time it's going to give us a positive value. So, and then I'll round it up to 2. So here we have this range. Now if I go back and I'll put those formulas again, those filters again, and we go back to the filter, we actually we see here. So next day close, sorry, previous day body, and then I'll say 100% greater than or equal to 100%. Now let's see, can we maximize our profits? So here it said if you short at open, you make 13.81%. You shot into a spike, you get 23%. Here you had 8%. You shot into a spike, you had 21% gain. Here you had 11%. You shot into a spike, you had 36% gain. You shot into here you had 52. Here you had 42%. Oh, sorry, my bad. 13, 15. This is the number we want to look at. So 13 to 23, 15 to 21, 29. If you shot into a spike, 36%. Here, if I shot into at open, I only make 12%. But if I wait for a morning spike, I get 42% gain. So really, you're starting to see here that the gains, if you wait for a morning spike, or if you're good at reading the tape and you can take some partial entries and then hammer into, like I have my own scaling methods there, but here is where your conviction lies. So you know that you have massive amount of gains to be made when the stock really does this criteria. And really, if you're good at picking up, once you can get a morning spike and the spike stops out, you can quickly move your risk down to high up the day and add more size to that position. And that's how you can scale and lock on more size into that trade. Because once the stock spikes, it's done, its morning spike gives you that crack, does that lower high bounce. You know that now, instead of risking previous close, some pre-market top, you know that like the high of the day is now your new risk. So now into that new pop, you are throwing in that big size, waiting for that huge flush and close, that end of day close, and you're trying to bank 40, 30, 20% on that trade, which in my opinion, this is the kind of trades that will really move the needle on my account. So this is just a basic thing on what I do. Obviously, like you can throw in as many ideas as you have to really, increase the criteria. Here is something I found. So if I do this, I'll just show you guys a perfect criteria. So this is when I was testing. I found that if the stock is at closes over, that means over 170%, really I'm winning 100% of the time. I only had 18 records. Basically, the stock, PPSI was also one of them actually. So recently, and that's the reason I was sized in so heavy until, the market makers decided to pull out a midday squeeze. But I was sized in a huge size onto PPSI, and just on like a 10-cent drop, I was up like $2,000 on it. But here you see that you're winning almost 100% of the time, right? So you're not going to go wrong. Another trade that I did was IINN. If you remember IINN, right here, I was short big into this trade, right? Because it fit the perfect criteria. And exactly what happened, the stock just spiked a little, just kept fading all day, right? We look at another example here. Let's take BME, right? BME was another one, right? BME spiked like crazy and it started gapping down all those buyers. I was long into close, right? And then I saw it like being weak. So I got out for a break even or, $200 loss. And then the next day it gapped down. I didn't short it, did not stay over $2. So really did not fit the perfect criteria in terms of the number of shares that I would have to take on this trade. But again, massive range, right? 20% on this trade, 24%. You had MDIA, right? Same story. MDIA squeezed a bunch of shorts the day before, and then the next day it gapped down. You see the amount of range we are getting from 13 till 8. Let's say you have a small account, you short 2,000 shares or 1,000 shares, right? 13,000 or even 500 shares. It's nothing. Now imagine if you have a big account and I'm shorting 3,000 shares, 4,000 shares into this trade. I'm really, and even if I get an average of 1270s, right? 1270s till 8, or even if I cover early at $9, I'm still $3 a share. That's really a lot of range to kind of capitalize on this trade. So that is what Spikeet really helps me. Spikeet really helps me is like gain that conviction on the trade, to size up heavy and to stay convicted on the trade.
Can I ask one thing? Maybe others will find this interesting. I noticed before when you started to narrow down your cases, right, from 100 plus to 42 or 52 it was. My question is, in your approach, do you normally like to have less trades but more conviction on them, or you're looking for like a highest winning percentage? Or again, you prefer to take the trades, you know, that you have better odds on, even though they happen less time during the year or during the month?
Yeah, so it really then comes to position sizing, right? So I have each setup graded. So there is a A++ setup, there is a B setup, there is a C setup. I don't even go under B, but let's say on an A+ setup, I could be risking $4,000 to $5,000 on a particular trade. But then if the setup drops to B, I'm risking $300, $400. If the setup is A++, I'm really upping my risk to 10 to 15% of my account size. And really to define your setup, what is an A setup, what is a B setup, what is a C setup, and what setups I don't want to touch at all, and how much risk I want to allocate to each trade. Because if I'm wrong and on a B setup, sure, I'm losing $500 relative to my account size, nothing big. But if I'm on a B setup, if I'm risking $5,000, I'm really putting on a lot of risk for something that I don't have a high conviction on. So if I want to take a trade and I think that I'm good at reading the tape and I can do a quick scalp of it, I'm only going to risk $500, $600, $700 on that trade and really take on the quick flush into the thing. Next thing, you know, if I want to know like more detailed into it, then I can go into it and use, I don't know if you guys have used any scatterplot graphs, but then if I want to be like, okay, if I want to just scalp, right, how would I be able to scalp? So next thing I can also see is I have time of the day, right? So if I can read the tape pretty well. I'm really, my most of the entries that I get is of reading the tape. I can 90% of the time I can read and find the tops on the trade, the tape really well, especially when it's my setup. So next thing you can just say is, okay, I want to insert a chart here, right? I'm going to look at the chart and I'm going to try to see where does this low of the day, low of the day happens, right? So this is all over the map. So then the next thing you guys want to do is, you guys want to start, so some low of the day happening is between 2 to 4, some between 10 to 2, some between 8 to 10. So then you guys can again start filtering and then start plotting a new graph and start seeing, does this criteria, under this criteria, my low of the day is fitting in this time horizon. So then that tells you, you can start taking on, locking in some profits. Maybe the reversal is bound to do, right? And hold on to the other part of the trade and then move your risk down into some kind of pop that's happening. So really, when I'm taking a trade, I'm shorting and I'm finding failed pops to move my risk down. And then that becomes my new risk level. And then once I have the new risk level, I know that like this setup, I've studied it enough that if the stock breaks this new risk level, the odds are it's going to squeeze and buyers are going to come in and shorts are going to cover. So it makes sense for me to move my risk down to this level and tack on more size. And really, people have mixed theories about scaling. I really was able to grow my account size really fast because of scaling and keep my losses small, because like taking on big losses hurts my psychology, and I really can't take on, like unless it's a predetermined huge loss that I've thought about it. Without that, I won't be taking on any huge loss. I like to stay tight risk, take on starters. If I'm wrong on the starter. But once the trade is in my favor, I'm really tacking on size, and I'm moving my risk as tight as possible. So that's about it.
That's awesome. Awesome to hear. Before, there are questions. Before we hop over to the questions, I guess one interesting quick last questions. Before you found us, how did you use to gather data? What was your process?
I used to go to each stock and at the end of the day start recording, or like, I used to get watch list alerts and things like that. And I used to go to the watch list and start finding the stocks that are listed and then start going to those trades onto my charting software TC2000, record the high, low, and everything. And like it was a lot of tedious work. Yeah, I couldn't get this much amount of data, and so the amount of data that I get now in one shot is really good. And I use a lot. I've been working on a new gap and crap strategy that we're like, I won't walk into much detail, but like again, sorry, one second, let me just load it up. But again, gap and crap, again, it's a lot more tougher strategy. I would say that it's something that like, even me having experience, I still have not been able to figure out everything that I need to know about sizing up. So I'm still working on the data, but you guys would see that like I am big into volume. I'm tracking every single volume that's coming in and really trying to figure out where can I see squeezes. I have even my own volume forecasting built in here. I have I'm tracking everything, the time of the day, the market cap, the news, the distance from highs, the closing, the spiking percentage by 9:30 at the open, how much does it spike? At 35, how much is it spiking? At 10 a.m., what is it spiking? I really want to know everything I can so that I can create that perfect criteria. And then same thing, I'm using the count to increase my win ratio. And again, I have been able to bring it up to 90%. And I've traded 4 gap and crap so far. And I've won on actually all of them except PPSI when I was up $4,000 and I didn't take my profits, and then the profits it squeezed midday and then I lost my profits. But like all the other trades that I've taken, I've won on them, right? Even on what was the trade yesterday? GDEC. I was down a little, but then I made $2,000 on the trade. So really didn't size up much because I'm still testing this pattern. And I'm trying to get my whole odds against me. So again, you have to track every possible thing that you can.
That's amazing. Yeah, hearing you is really, a reason for why we've built this. So I'm very happy to hear that you're able to utilize this platform and draw conclusions out of it, and basically it brings you value at the end of the day. So yeah, I think we're gonna open up the chat now. I know people have shot up some questions, so we can start from the beginning. Let's see. So someone asked if you're curious if you are interested in Dux's methodologies, as he is a big volume person as well.
Yeah, so I follow Dux very closely. I can tell you guys that I have spent in the effort to go through all of Dux's. So I'll tell you this, right? Something that like really changed my trading. I'm a big Dux fan, and I have never really joined a service. I have never really paid a single dollar to learn from Dux, but he has so much YouTube content. I've watched a lot of his videos multiple times over and over again, right? And every time I come to a new conclusion. Another person that you should be really reading up blogs on that I have discovered, in the last few months is Trade the Metrics. He really talks about so for me, everything is about the market psychology and how you want to put the odds in your favor, understanding the small cap psychology and how market makers work and what are liquidity zones and like how can big players not get out, because we really are small players in this game. The big money is moving those stocks, right? So you want to understand how the big money is trading, and Dux is great in terms of like data analysis and things like that. And I really watch a lot of his videos, and I go to his profitly trades and I try to figure out how is he entering. I pinpoint it, and a lot of it, I kind of figured out a lot of what Dux does. And something that like, if you go to read the Trade the Metrics blogs as well, you will figure out a lot of it as well. Really interesting blogs about small cap manipulation. I really highly suggest. He has 4 blogs written on them. I've read most of them multiple times. Every time I keep learning something new.
Which guy? Maybe we should approach him someday. Which guy is it?
It's on Twitter. It's called Trade the Metrics. So
Okay. So yeah, maybe you'll pass it afterwards.
So it's trade trade the metrics, and the guy has awesome blog posts. Like I have read a lot of his blogs, and a lot of it is like I can now see the manipulation happening, right? And I know like when I need to take my short, a lot of like Gap and Crabs, he really talks about how all those, and guy has a lot of blogs and amazing blogs. I would highly suggest reading this. Like will really put you insights into like how a lot of people who are out there, gurus are teaching is like, it's really much like you guys are telling us follow this pattern and follow this or do that. But like, are you really thinking about the psychology behind it? Why are breakouts failing? Why are high of the day? A lot of, if you guys are buyers, you'll understand that like when you're buying that high of the day, a lot of times you guys are getting flushed onto that move, and why you should not be buying high of the day when there's a particular type of price action. When should you be waiting? Or like a lot of those breakouts could be trap, and like why are those traps? What do market makers do for those traps? And like really interesting content. So yeah, I spend a lot of time reading all these things, and I'm still like reading a lot of those. Yeah, so really amazing blogs. Yeah.
That's great. That's really, really insightful. So guys, make sure to check out this blog. We'll try to reach him out as well. Maybe he can share with us some thoughts. Let's see. So how are you getting the data in Google Sheets? I have to use Zoho and can export. So
Yeah, so I
regarding
just downloaded.
exporting, yeah.
So
I saw this question repeat a lot. So, you know, we have the monthly tiers, which you guys can utilize the Zoho spreadsheet. Zoho is very similar to Excel. Some people like it. Some prefer other alternatives. If you like to get, you know, the option to export data outside of the platform, then we have the Quantily package where you can utilize that. And Karan is on that tier. So as you can see, you have a download option, and then you have different options on that.
yeah,
If you
so I just
want to
download it
add,
and then upload it to my Excel sheet, Excel drive. That's it. That's where I mostly keep all my data on a cloud. So I don't, because like if I decide to change my laptop down the road or things like that, I like to have everything on a cloud. So I mostly keep all my tracking on a cloud.
okay, so can I please request that this is recorded? Yeah, someone wrote, I might just subscribe for the annual because of this video. So I think people are seeing this valuable, this video valuable. Yeah, we are recording this, and we're definitely gonna upload it and share the access. Again, can you please make this video rewatchable for Spikeet subs? Someone asked, are you an Indian?
Yes, I am. I was born in India, but raised there for 7 years, and then raised in New Jersey for some years because my father used to work here, and then moved to Canada when I was in my teens.
Nice. So now you're in Canada, right?
No, I'm in New York City. I work here
Ah.
now. So I moved here 2019. I found a job working as a software developer
Yeah.
when I was traveling, and then I've been in New York City since. But hopefully by the end of next year, my goal is to take my account to $1 million and then quit altogether. So the faster I reach there, the quicker I'll be able to quit my job and just trade for a living.
Yeah, that's awesome. Thanks so much. Will you email us the link? Yes, we will. Is the data adjusted for reverse splits? So we have worked extremely hard to build a very quality data set. And that not only means, you know, getting the highest quality of market data right from the exchanges and not going through any third parties, but we have also built a very unique splits and dividends data sources. And when you guys go into the platform, you know, and you want to pull some data set, or you have some criteria in mind and you have an idea you want to test out, you can basically set the adjusted to be true or false. And then that gives you the ability to ride both waves. So you can utilize, you know, adjusted data and also unadjusted data. So using unadjusted data can be useful if you want to, for example, track all stocks that were between $1 and $20. And if you go to charts now and you see their prices, you'll see crazy prices. You'll see $100 or $500,000 as the open price, and that's incorrect. And the reason you see this is because these charting platforms, they have splits applied to all these charts. So setting unadjusted gives you the ability to filter all and pick up all these stocks. So that's very powerful. And if you want to apply the adjusted on the data, that's useful usually for multiple daily data points. So if you want to find like a 20-day moving average, applying adjusted true is very useful in this case, because if a split occurred in that 20-day, you'll still get correct data. So having adjusted and unadjusted is very important, and you guys should approach it wisely, because some cases you want to set adjusted true, and some cases you want to set adjusted false. The recorded version will be uploaded where, like we said, we will upload to probably YouTube and email you the link. Okay, awesome. I need to watch this like 5 times to understand. Can this data be downloaded to Excel CSV? We went over it. Check our pricing plans. Like we said, you can do that on the quant yearly, or you can choose to utilize the monthly tiers. So much potential to track stats. Let's see. Someone asked, how do you scale? I'm not sure if they mean into the position size, but I think you touched that a bit.
Yeah,
about scaling.
You gotta find the highs. If you're good at reading the tape, you can see where the tape is getting heavy. And that's my clue to throw in some size in there. Obviously, like I'm still using a wider risk where I'm looking for some failed pops pre-market where like the pre-market action. Ideally, it's going to be something along those lines, right? A lot of times, which I have noticed, it's going to be something along those lines where you'll have, so let's say this is your pre-market action. I'm just gonna separate it by line. And then the stock is gonna, on low volume is gonna pop, fail, it's gonna come here, it's gonna pop, fail, it's gonna pop, fail, and then it's gonna have a drop. So really this level becomes and then closing price could be somewhere here, but like this pops, I'm watching them, right? And why are they failing? Something is up there, right? So that first layer is there. So I already know that the stock comes anywhere close, and then an open, if I get a push even here, I'm starting to short using this as my risk. It comes higher, I'm adding, and then still I'm not full size, but then the stock drops, right? Gives us that bounce, right? Bounce, I'm throwing in orders, right? Using it at full size, and I'm really aggressive on the day, then onto this crack. I have an average somewhere from here in this area. Using this crack, I could, if I'm thinking that the stock is going to fade a lot more and the flush is on some volume, I could also throw in some more orders into this crack and then write it down, take some profits here. And then if I get a midday bounce, re-add, so keeping my core position, and then look for that fade into the end of day.
Okay. Another questions regarding adjusting. So do you usually adjust data by seasonality, winter versus summer, day of the week? I'm not sure what you mean by that. We adjust data for every day and every minute and every second. So you have the dividends and the splits data, and then you have the actual data, and then you can get adjusted data by combining all of those data sets. Can you filter for dollar volume instead of volume? Yes, you can. Let me share my screen. Maybe I'll show it to you.
I gotta stop sharing here.
Yeah, I guess you can stop sharing. So the dollar volume is basically another way to basically a way to do this is to build your own formula. So let's see. Is my screen, can you see my screen?
Yeah.
Okay, so if we sign in, let's see, let's go to data, and then so you have this custom section here where you can basically plug in your own formulas. Now, dollar volume is a lot of people define it in a lot of different ways, but basically we recommend usually to put in a formula that says VWAP times volume. So since you cannot include VWAP data points here still, something we're working on, what you can do is a small hack. Let's say you want to filter for all stocks that gapped up more than 20%. If you want to get the dollar volume, or if you want to filter by the dollar volume, what you would do is you would first pull the volume on the day. So this would be the daily section. You would choose the volume data point on day 0, and then you would click volume. And then you would pull the VWAP data point, which is under the indicator section. And you would do VWAP. Let's do VWAP. And then what you can do, as you can see, we have the VWAP, and you can select adjusted and unadjusted. What you can do is you can build your own basically formula. So the way you combine actual columns that you've already added into formulas is you want to enclose it in curly brackets. So you have here an explanation. Basically here, you see. So if we say volume times, let's say volume times VWAP, that will give you the dollar volume, right? Because the formula is volume times VWAP. You can add that. So you can say this is dollar vol, and you can give it a name. And then once you have that in the spreadsheet, you can filter by that. So that's kind of a small hack you can do until we add the VWAP data points inside the formulas. Because at this stage, you can have inside the custom formulas, you can have indicator data points, but this is not volume. You cannot put volume inside the custom formulas. As of today, it is something we are working on though. So let's see. Trade the metrics. Yes, this webinar will be replayed again. I think. So someone asked with the Quant annual membership, how does it get updated? So we are planning to issue an Excel plugin where data would be rolling out to your existing sheets without you having to go into the platform. This is something we have been working on this year, but it will probably be released next year. So once you download the spreadsheets, you'll be able to connect with a plugin. You can also do this on Google, I think, right, Karan? There's plugins. It's easily manipulable, so you can just grab the new data by a click of a button. Can you go over a bit more on volume forecasting? I also have a spreadsheet trying to dig into this. I follow ADF on Twitter, but it's nice to see someone's actual sheet breaking it down. Did you do volume forecasts?
Yeah, I spent a lot of hours on that. But basically, volume forecasting is, I won't give you guys the whole thing. I spent
Yeah, that's
banging my head against the wall for this. But way I started it was on Excel. I obviously use Spikeet heavily for it. Sorry, Spikeet. I keep saying their name wrong.
Yeah, like
but
Spike.
so here is all your volume, right? And okay, so I'll give you guys two approaches, right? So if any one of you guys know how to do linear regression, right? So linear regression is basically when you plot a scatter plot graph, you're gonna see what is the data point that's fixed, that's going along that that line. How many data is fitting in that line, and the higher the data set fits on a linear line, that's basically it's fitting the regression, and then the more accuracy of the data is. So I was like, okay, let me start doing it. And then what I did was I basically took my pre-market volume and I ran a linear regression against my 930 volume, right? I took the 9, and then I was like, okay, I'm getting a 0.996 or 0.97, right? So that's a 97% fit for me of the R value on linear regression. You guys can read up on what it is. But then sometimes we have fluctuation, but then if I went against pre-market volume against the end of day volume, which was the end of day volume right here, I basically, my regression formula went down. So then my R value went down. So I was like, okay, I need a more accurate volume forecasting idea, or like how can I reduce the noise in between, because sometimes we have. So then I started running linear regression against shorter time frames, and that's how you can get more time frame data, and then running it against shorter time frame will increase your R, but don't go too micro time frame, because then the fluctuations will kill you. So use a time frame that kind of fits your data set, and then see how you can do it. But basically, if I have a pre-market volume here, I can basically go in and be like, okay, that's my forecasted volume, right? And I have forecasted volume for each time frame that I can relatively use, and I know that at any point it goes over the forecasted volume for that time frame. Now the volume is exploding, and I can really use that. And like I have built in much more sophistication in here, where I can literally go in here and I can say that, okay, if my volume forecast is this and I want to change it, so tell me what happens if I plug in a new 1030 volume. Is the volume forecast going to change drastically? So I can use that as an analysis as well to see whether the volume is going to be shooting high with this new volume coming in, and what's going to be relative to the end of the volume. And a lot of it is built into it. So a lot of times I can go along any time frame and I can plug in a new forecasted volume just to kind of get an idea. Again, there's a lot of stats and volume and everything that goes into it. So yeah, that's how I do it. So if we look at GTEC on yesterday, and then let me just do this so I can just see the whole drop down. So GTEC yesterday itself was doing 136% of my forecasted volume. So I had forecasted 105 million to be the volume, and it did much more than that. So, but the reason I was short was because you can literally go and track how much percentage at each time frame needs to be done between the forecasted volume. And then you can kind of figure out. And then this was something I was eyeing, because I shorted right here into this pop. After this breakdown, I was short 2,000 shares into this pop right here, and then at 10 average, and then I wrote it down. I took half profits in the 825s, and then I re-added some here, and then this kind of, I was too much scared of LGBN action, so I took it off, and then I came in, and then this again was a nice top supply. I saw this wick fail, so then I re-shorted another 2,000 shares in here, but I was quick to get out, and then that's it. I didn't trade any big size on it, too much volume coming in, but I saw a quick entry. On the other hand, LGVN, I had a huge loss. Was totally my mistake, but I was doing a huge volume, and my thesis was very simple on LGVN, where as I said, I use forecasted volume consolidation regions a lot. So you see this was consolidating, right? Buyers were buying, buyers were buying, buyers were buying, buyers were buying, buyers buying, buys, right? All those coming in. So what's going to happen when this tanks? Buyers are screwed, right? So this failed pop, I shorted some. Then I again started seeing, right, wiki action, and that's you'll know what I mean once you start reading Trade the Metrics blogs. But again, I saw this dump, I shorted into this. My average was somewhere here, and then I had some wish orders sitting for this pop right here. I got executed, and my size doubled, and within a sec, I was like down a massive size onto this position. So then I ate the loss. I rebought this dip into this area because now this support becomes, this resistance becomes support. So then I bought into this dips, and I was long about 10,000 shares into this because I was like, this is squeezing hard. I got dumped on it again. And I was up like a good $4,000 or $5,000 just onto the pops, but like really like this dump happened, and then I gave back a lot of my profits because I didn't lock it because I was thinking about a bigger move because I had a swing thesis in mind from get-go. As soon as I saw this squeeze, I was like, okay, the volume is crazy, low float, day one, massive volume, squeeze everyone out. Even the comfortable shorts that were sitting here are also now uncomfortable. Every short is underwater. So then I had a swing thesis from get-go, and then it dumped me out, and then it kind of squeezed end of day. And then I was down $7,000 on total. I was down $13,000, but I had $6,000 locked in from SEB short. So then basically I saw this squeeze happening again. I saw this dip right into 750. I threw in a 2,000 share buy. I saw this, and then I was like, okay, the next buy zone is this once it clears this. So it cleared this. I threw in orders for this dip and everything. So I made about $4,200, and I was able to reduce my losses on this. So, but still ended the day red on that trade. Really, my thesis was right, but the fuckery on the stock was too much for, and I sized in too fast, too big. And that was probably my mistake. So something I learned on it.
Would you say, obviously pulling the data is super fast, but would you say diving into the volume forecast, building the model, would you say that takes a long time, or did it take you fairly not a lot of time?
A lot of time. Like I had the basically running linear regression is not the time, it's the testing it, right? It's the testing. I've been testing this. I had my volume forecast ready last year in September, right? I really did not started talking about it on Twitter or anywhere until this year of September or October, around or August or September. That's when I started really talking that I have a volume forecast, because I was testing it for a year. I was really every day testing it against the new stocks popping up. And really in the start, I did not really have a volume forecast the way I have. I was literally manually testing.
So it takes time. When you have the data, that's part of the journey. You still have
this was my initial volume forecast model, right? I created on an Excel sheet, all the formulas are in here. And then I was just like testing them and testing how is the end of the volume, what is the percentage forecasted completed, getting data, and like also you using Spikeet around the same time, and then running everything together. It took me a year to just figure out that my volume forecasting is accurate before I implemented for me on my on TradingView.
I see. So it takes time building the model as well. Okay.
Building the model, if it won't be tough. I think there is a awesome blog post by Karan, another guy you guys should follow.
Yeah, we know him. He's someone we are aware of.
Where is the thing? So again, I got inspiration from it, and I went and I created a better version of it. So this is a great blog. Read it. Spend time reading it, right? I spent a lot of time reading it.
Mm-hmm.
So
someone asked, is your volume forecast for gappers above 50%? Like, how do you filter?
50%. Yeah, I don't touch stock that don't gap down, don't gap up over 50%.
Okay. I think there was one more question that I think I missed. We can pull price data by minute. So for example, if you wanted to compare highs and lows from open, to each minute after open, first 15 minutes. You can do that. I don't really understand what you mean by that. You can basically analyze minute data. So if you want to repeat the question. Why is 50% gap the criteria? Again, we're reaching almost an hour and a half here, so only if you have time, Karan, you can.
Yeah, we'll end it soon. 50% because range. Ideally, I'm not even going to touch a stock that's not up more than 80, 100% on the day, but 50% is like the minimum, because like the stock gaps of 20%, what's your range? The odds of going squeezing is much higher, especially on the short side.
That makes sense. That makes actually a lot of sense. Does the data update daily? Yes, it does. Every day at midnight, basically you get the data for the day that just passed. We're going to integrate also live data soon. So we're going to have continuous data throughout the day. Yes, just asking if we can pull minute by minute data. Yes, you can pull minute by minute data points. As he showed, you go into the intraday section, and when you pull the time or you pull the low of day or whatever, that's based on minute intervals. Can you get the data from open candle, close candle, high candle, low candle, like for 15 minutes? Yes, you can. Okay, I think there isn't. What is current Twitter?
Yeah, you guys, that's
maybe you can write it in the chat for them as well, and I'll post it into the video description. How come you make people use Zoho Sheets? So you have to understand, data is very expensive and comes with a lot of licensing restrictions. So eventually we get our data from the exchanges and other various data sources, and we have limitations of what we can do and what we cannot do. Therefore, we have the built-in option of Zoho. We cannot just let anyone export the data. It's, we are also licensed eventually because we are getting the data from high quality data sources. It's not that we are scraping data, free data that you can just redistribute. You are utilizing here the highest data quality out there. So you get name symbols, you get the listed tickers, bankruptcies, all of the edge cases, OTCs plus listed. So we wanted to make sure we give you a wide coverage of data, and we have to also follow and abide the licensing and restrictions we have. So if you are comfortable using Zoho, you can, because it offers everything Excel does. It's a bit slow sometimes. And if not, you have the other options to export it. For the close candle, it will be 15-minute candle after open. The close would be 9:44, 9:45. So usually, for these kinds of questions, you can reach out to us via the live chat. But yeah, you want to put in the 1 minute before. So if you want 15 minutes, then put 9:44, and that will give you the 15-minute range. But again, you can just reach out to us, and we'll get you covered on that. Now people are thanking us. Sure, guys, it was our pleasure. Are we going to have access to the recorded session? Yes, we are going to record it. It is recorded, and we are going to share the access to it. Okay, glad it helped a lot of people. We see here good comments. So yeah, I just want to thank you again, man, for joining us. It was really insightful. I personally wanted to do something like this for a long time, to show people first how to basically utilize the platform to pull the data. What's the thought process of having an idea and actually implementing it via the platform and getting it into a spreadsheet. And then the more interesting part of what you did is basically, how do you take a data set? How do you start tweaking it and getting insights from it, getting like a sense of direction, what to do, how profitable can you be on that specific criteria, etc. So yeah, that was awesome. Someone is complimenting you as well here. Great early success. Yeah, it was awesome.
Yeah, thanks, guys.
Okay, guys.
All
Thanks.
right.
Thanks for tuning in.
All right, later, guys. Bye.